Good numbers. Walk us through them first, quickly.
Good to be here, Rish. Yeah, thank you. A great result all round for Fortescue in the last 12 months, Rish. We had 170.4 million tonnes of product shipped. That is an all-time record for Fortescue, albeit it's only 1 million tonnes or so above last year, because we've been focused on making sure that we create the greatest value for our customers and for the company. Costs are down a further 17% in C1 cost terms. That's following our focus on productivity and efficiency to make sure that we've got long-term sustainable low costs across the business. We paid down a further $2.7 billion worth of debt with the cash flows that we've been generating. And as you mentioned, we've more than doubled net profit after tax to $2.1 billion. And that's followed on with a dividend of 25 cents final dividend for the year.
All right. Now, what are you going to actually be doing looking ahead right now? You know, there's a lot of talk about, you being a one-trick pony, and therefore you're always at the behest of what happens with the iron ore price. You've been described as an exploration specialist. What are you looking for other than iron ore?
Well, Rish, the iron ore market is an incredibly good market to be in, and you can see that from the very strong cash flows that we've been earning. And our focus has been on being the very best iron ore company that we can be. We're very close to the core markets in China and the broader Asian region, and we have around 12 or 13 billion tonnes of hematite resource across our tenements in the Pilbara. So we're in a very strong position, and the iron ore business will remain our core business. Having said that, though, we have been very successful as an exploration company, and we're continuing along the lines with that success by pegging tenements in highly prospective regions in Australia and in some cases overseas. And we're looking to create options for future growth for the company.
Well, I brought up a chart earlier showing how iron ore and, you've been exporting like crazy to China, but we've got at Qingdao inventories near highs, well, record highs, off record highs actually at the moment. Does that worry you?
Rish, they have been very high. We've just seen in the last 3 or 4 weeks those inventories start to come down, which is a very good sign because it means that supply-demand balance has been restored. But we did see during the last perhaps 9 to 12 months increasing iron ore stocks as supply had overrun demand during that period. So I think the iron ore market has been in oversupply, and we're just very recently seeing that reverse, which is a good sign for the industry.
Well, yeah, I mean, you've recently said that iron ore prices are uncharacteristically high. Now, when are we going to see a correction in your view? Is there going to be a correction? And where should prices perhaps then settle down if there is a correction indeed? And essentially, I'm asking you for some guidance on the price.
Rish, what we've seen happen is because of the closure of a lot of illegal steel production in China, perhaps as much as 80 to 100 million tonnes of production has been closed down, and that extra demand has gone back onto the big integrated steel mills. That's driven the price and the margins for steel products in China very high, and steel mills have been buying high iron grade iron ore to maximise production, and that's why we've seen particularly the higher iron grade iron ores go up very sharply, and a big spread across the market. We're seeing that start to level off and now start to close as steel mills become more focused on minimising their cost of production. We think that the iron ore price will come back to historical levels. And if you look at the supply-demand curve globally, that's probably somewhere in the sort of $55 to $65 per tonne range.
Well, tell me something here, Nev. We've got a situation where the iron ore price is, very good, and, you're basking with the numbers that you have right now. In other words, the sun is shining for you. What do you need to do at the moment? What parts of the roof do you need to repair? Because it's best to do it when the sun is shining.
Absolutely, Rish, and we continue to focus on improving the productivity and efficiency across our whole business. And for us, that is particularly focusing on things like our ore processing facilities, which we use to upgrade our ore to product quality. And that also allows us to mine more efficiently because we're able to mine lower cut-off grade ores and then beneficiate them. So that's a key focus for us. In addition to that, we're using a lot of new technology around our mining areas with autonomous haulage on our trucks and using relocatable conveyors to replace long haulage in some of our mines. And going further on from that, we're also investing in future production by putting replacement mines in place well ahead of when we need them and maintaining around 20 years of production inventory ahead of our mining operations.
Okay, tell me about the dividend, moving that up, and it's going to be a ratio of the iron ore prices, what you're suggesting as part of the guidance here. But, is it really a sea change in your policy now to be actually rewarding shareholders and perhaps paying less attention to the debt that you've got to pay down still?
Well, Rish, we paid our first dividend back in 2011, and we have remained very consistent with our policy since that period of time. We've had a priority on repaying debt and investing in our core iron ore business, and we have been very disciplined about doing that. Our debt is now paid down to a level where we're able to start increasing the returns to shareholders, and that's what we've flagged with this latest policy. With 50 to 80% range of our payout ratio, it means that we'll ensure that shareholders benefit through the full cycle of the iron ore price. So it's not so much about coming away from our debt reduction. It's a matter of our debt now becoming in an area where we're very comfortable with for the longer term. We'll continue to repay that, and at the moment we've got a 21% gearing, net debt gearing, and we'll continue to pay that down, but at the same time continue to increase returns to shareholders.
You got this depleting Firetail asset, haven't you, Nev? You need to get a replacement for that. You've got to fund it. How are you going to do that?
We'll fund that out of operating cash flows, Rish. We've estimated the cost of that at between $1 and $1.5 billion US, and that spend will be over around about a 3-year period from 2018 through 2021. And that's be very comfortable for us to fund that out of cash flows and still maintain our reduction in debt and payments to shareholders. So we're pretty comfortable with that. Firetail starts to deplete around 2020, and we want to bring new production in to supplement that from that point on, and then eventually replace Firetail as it depletes completely.
Do you see more consolidation in the industry, in your view, or are we past the worst of it and some of those unprofitable mines are profitable again with the prices the way they are?
We have seen the industry rationalise quite a bit, Rish, particularly with those high-cost producers that were only there because of the shortfall in production from the large low-cost and particularly seaborne producers. But it's fair to say that there have been a number of mines that have become profitable again with the iron ore price where it is today. And I think that going forward, with prices around the market average, we should see a good balance in the market. We have a good structure in the iron ore industry, Rish, because it isn't dominated totally by large low-cost producers, which means that we have a good industry structure and some shape to our cost curve, which means that we are able to enjoy strong margins when we're at the bottom of the cost curve.
Nav, last question. Will you still be a one-commodity company if I talk to you in 12 months?
Well, Rish, we are looking at a number of strategic options for growth of the company. The key for us is not about each commodity specifically, but rather where we see that we can add value and create shareholder value by the things that we do. So what we want to do is leverage off the core skills and capabilities that we've developed within our iron ore business and apply those to other areas or even other commodities. And fundamentally, that will primarily be through our exploration efforts, but it could be other opportunities as well. So we haven't closed our mind to looking at other things, but whatever we select, we want to make sure that we can create great value from it.